Uchumi, a Kenyan-listed supermarket chain, has cross-listed on the Uganda Securities Exchange with its shares closing at 620 shillings on day one. The company recently cross-listed on the Uganda Securities Exchange and is also set to cross-list on the Dar es Salaam Stock Exchange. For more now, I'm joined on the line by Onegi Obel, the director at the Uganda Securities Exchange. Thank you so much for making the time to join us. 620 shillings on day one. Would you say that is a good performance?
Of course not. This is a cross listing. If it was a regular listing, it would have been much more. But more shares are being made available for.
Of course, Onegi, we're also seeing Uchumi joining a lot of other Kenyan companies that have cross-listed on the Uganda Stock Exchange. What's making the stock exchange so attractive at this time?
Basically, there's a market and they have a strategy. It's basically sales. Uganda is a very big market for Kenyan companies, and most of them are doing quite well here.
This must also bode rather well for Uganda's capital markets.
Yeah, absolutely. We are looking at a regional front now. All the capital markets in the region are working very closely together. We hope that not in the near distant future, we should become really one capital market with just trading platforms in the 3 or 4 countries.
Of course, there's some interesting news coming from your neighbor in Kenya in particular, that there seems to be a trend of delisting, and this is because there's been quite attractive private equity inflows into the country. Do you think Uganda is likely to follow or be vulnerable to the same trend?
No, I don't think so. The delisting of a few companies in the Nairobi Stock Exchange is not normal. Let me put it that way. These are a few isolated cases. I don't think one can discern a pattern or a trend there.
And of course, before I let you go, understanding that listing on or cross-listing on the Uganda Stock Exchange opens up capital raising opportunities for many of the companies who do that. Are you seeing Kenyan companies and others in particular that have cross-listed taking these opportunities to raise capital on the bourse?
Absolutely. As you have probably guessed, most of these companies have a growth strategy which needs to be financed. Typically, they have a good brand, and their products are in demand. So, in order to grow across the borders of the region, they have to naturally finance their growth, and one of the best methods is through the exchanges.
And we also, of course, understand that the Capital Markets Authority is playing a very important role in creating an enabling regulatory environment framework. Would you say that there could be more improvements made on that front?
Yeah, absolutely. Of course, nothing like this can happen without the regulatory authorities. We work very closely together. We are always trying to remove the exchange rate differences for cross listings and for trading across borders. We have a very great cooperation with the regulatory authorities.
Thank you so much for taking the time to join us on the line.